Hey everybody, it's RC Peck, the founder of Fearless Wealth and the creator of the Fearless Wealth portfolio. Saturday, November 10th. Thanks. I was out for a week because of the hard drive break. I am back. Never left, actually. So the market situation report, my attention is going to the presidential election and what does it mean and what are the markets doing and digesting. And whenever anyone asks me over the last 3 or 4 days who I voted for, I usually answer the exact same way. And I say, well, my candidate didn't win. And what's interesting and what I want to report to you is that almost every single person, in fact, every single person said, oh, you voted for Romney. I said, no. They're like, who'd you vote for? And, there's more than 2 people that run for president. But what this reminded me of is the Chinese government in China and how they put a new leader in every 10 years, which I think this is a brilliant idea because it kind of fools people's eyes. It fools their vision and their hearing, thinking, oh, I'm hearing a new person's name. And so maybe things will change. But there's really only one political party in China. They just change the person at the top every 10 years. And again, I think it's such a great idea for the Chinese government, that is. But that reminded me of the U.S. government. And in fact, what they do is they just kind of put a new person up there every 4 or 8 years. And yeah, maybe they're Democrat or maybe they're Republican, but to me, they're really all part of the same party. And so my vote for Gary Johnson, though, I voted for him because I like what he stood for. But to me, he's really the other candidate. And so I want to look at the presidential cycle. I want to look at the election and how it's affecting the markets. So I have a bunch of charts for you, and let's jump to those charts. The first chart I want to show you, jumping ahead here. The first chart I want to show is the S&P 500. Now, if you look on this screen, there's a vertical line over to the right. And that vertical line is Tuesday, November 6th. That's the day of the election. So everything I want to talk about is within this red circle here. But since November 6th, the market has fallen pretty much 3 days in a row. And so most people would say, oh, okay, the market doesn't like who got elected. Now, I've been saying for many months that the stock market is being held together. And my experience of what happened Wednesday, Thursday, and Friday was, there's just like this release, like, okay, whether Obama was going to win or Romney was going to win, there's just this like, okay, we now know who's going to be in. And the market is digesting that. And the market needs to correct down. I've been saying this for years. So I just thought that was interesting that the market fell 3 days, the first 3 days since we know who's going to run the country for the next 4 years. So that's what the S&P has done. It's fallen. So then I wanted to know what was going on with long-term U.S. government bonds. And not surprising, the price of bonds went up. That's the price of bonds went up, which means the yield went down, which tells me that whenever someone buys bonds, especially today, that means the level of concern of the future is going up. So again, I really don't think it mattered who got elected. I think now that we know, there's just like, oh, okay, I'm still concerned. And again, the vertical line on this price chart is Tuesday, November 6th. So then I wanted to just see what the dollar did. And as expected, the dollar is up since then because if people are moving out of the stock market, they're moving into U.S. government bonds, which means almost always means they'll also be moving into U.S. dollars. Because they're almost the exact same product, except the dollar doesn't yield anything, though the U.S. bonds don't really yield that much either. So then I moved my attention to gold because I just wanted to see, hey, how is gold being treated? And this is what I thought was most interesting since November 6th, is that people treated gold like they treated like a reserve currency. People also went into the Japanese yen, they went into the US dollar, and they went into gold. And they went into gold, precious metal mining stocks. So this is very, very different. Every month, every quarter, gold is more and more being treated as a non-printable currency. And even though the printable currency of the Japanese yen and the printable currency of the US dollar are still attracting people when they get concerned, we have now almost fully added gold as another safe haven currency, though this is a non-printable currency. So I thought that was really interesting. And again, the vertical line on this price chart is Tuesday, November 6th. So then I wanted to know about this whole presidential cycle stock market returns, because I've been hearing about this for years and I've tracked it for years, and I just wanted to throw this little chart up here. So basically what you're looking at in this chart is every year of the presidential cycle. So the first year the president's in office, the second year, the third year, and the fourth year. So we're in the fourth year of Obama's first term. And historically, and this data goes back to 1932. So historically, the fourth year of a presidential cycle, the S&P 500 will go up almost 7%. That's this number here. In the third year, check this out, 26%. That would have been last year. Now, last year only went up 2%, but the last third year cycle was 2007. That was up. 2003 was a great year. 1999 was a great year. So that's very interesting. Look at year two. The average return is negative 3.3, and the first year of a president is negative 0.7. The thing I wanted to point out is how, look at this, the majority of all the returns are in 1 year. 1 year. I mean, that is amazing. That is amazing. So year one for us will be 2013, then 2014, then 2015. So if we repeat ourselves, that means 2015 will be the next year that there's a good year in the stock market. Though I'm not saying I follow that or don't follow. I'm just kind of using this as partially this is interesting, but also wanting to point out to you over here the percentage of the time that year one, year two, year three, and year four of the presidential cycle is a losing year. So it's a 50% of the time year one is losing, 50% of the time year two is losing, and only 5% of the time year three is losing, and 1/5 of the time is a losing year for year four. And, you know, the last year four we had, which was 2008, was not just a losing year, but it was a negative 39% loss year. So those are the presidential cycle numbers. I have my talk coming up this Tuesday, November 13th. Of course, I'm going to give my view and update on stocks, bonds, currencies, commodities, precious metals, and real estate. I've been doing all these interviews on real estate that I'm going to start posting to the site for the elite group. And I changed ticker symbol speed round to, I'm calling it now speed investing, which is really what it is. In 30 to 60 seconds, I'll take your stock pick and I'll tell you exactly what I think is going to happen with it. And of course, we'll have an extensive Q&A, but we'll talk about the fallout, a little bit more of the fallout, or now that the elections are over, what does it mean for the end of the year with the fiscal cliff, and should you take your gains on your capital gains or not? So we'll be looking at that. Thanks, everyone. I'm so glad you're here, and I look forward to speaking with you soon. All right, take care.